Friends, in this video we'll see certain case studies on the GST valuation. GST valuation provision has been given in section 15 of the CGST Act. We'll not see the basic provision, we'll directly see certain case studies which will help you in the exam. The first case study, let's start. A is a original equipment manufacturer, enters into contract with B, who is component manufacturer, to produce 1000 component at a price of rupees 100 per component. So the total contract value is 1 lakh rupees. Okay. In addition to this, it has been agreed in a contract that to manufacture the 1000 component, A will supply certain mold, jigs, fixture to B to manufacture those components. So the question is this 100 rupees we need to add the amortized value of the tool which is supplied by A to B for manufacture those components is to be added in the price of rupees 100 per component, or in other words, this 100 per component is a sole consideration, or we need to add some amount for supply of that tool, molds, fixture. See, you need to understand the basic one important difference between the two words consideration and conditional of the contract. Consideration means certain things that I perform in a contract. In return, what the amount that I received is a consideration. Conditionality of the contract is certain things, certain obligations are cast upon you, the non-performance of which the contract would be frustrated. What is agreed between A and B? That A will supply the tool. A will provide some infrastructure facility to B to manufacture those components. Suppose A didn't supply those molds. B would say, I cannot manufacture because the mold has not been supplied by you. So the whole setting of the contract is such that only if you provide the tool now, then only I will manufacture the component. Otherwise not. So this is conditionality of the contract. This is not a consideration in the contract. It is an obligation on A to supply the mold, to B to manufacture those components. Therefore, the amortized value, notional amortized value of tool should not be included in the price, and 100 rupees per component is a sole consideration. There is a difference between conditionality of the contract and consideration in the contract. Have you understood this? Let's go to the next. See, what is this? X Limited is a company. Daily life example. This is daily life example. X is a company which entered into contract with Y, who is a canteen service provider, to supply the food to its employees, and it has been agreed that Y will collect rupees 25 per plate from each employee, and X Limited will pay rupees 75 per plate to Y. So what is the consideration? The question is, what is the consideration in the hands of Y on which GST is chargeable? See what is given in section 15, that all the subsidies is to be included in the transaction value. Only government subsidies should not be included in the transaction value. What is meant by that? All private subsidies will be included in the transaction value. And what has been given in the definition of consideration, that consideration may be from the recipient or maybe from the third party. So what is a consideration in the hands of Y? The consideration is 25 rupees which Y has collected from each employee per plate plus rupees 75 per plate. Okay. On that amount, the GST is payable. What you need to understand is that all private subsidies will be included in the transaction value on which a GST is payable. Only government subsidies is not to be included. Now let's change the example slightly. Continuing with the earlier example, that if A Limited provide all the facilities to Y, like kitchen equipment, table, chairs, electricity supply, etc. In addition to that, it has been agreed that rupees 50,000 per month A Limited will pay to Y for supply of food, canteen service providing. Now, what is the amount of consideration in the hands of Y on which a GST liability is payable? Whether these facilities that has been provided by A Limited, by A to Y, is to be certain amount to be added to arrive at a transaction value, plus this 50,000 rupees which A Limited will pay to Y is to be added to arrive at the transaction value. It is not. The notional value of kitchen equipment, space, electricity supply is not to be added. It is an infrastructure facility which A Limited has provided to Y to provide a canteen service. So a notional value of rent, of that floor rent, that furniture, kitchen equipments is not to be added to arrive at a transaction value. Further, this 50,000 rupees per month which A Limited will pay to Y is also not to be added, because that 50,000 is not related to per plate supplied by Y. It is a lump sum amount. The calculation is not behind this 50,000. The calculation is not that if you supply 200 plates, I will pay you 50,000. This is not agreed. What is agreed? That I will pay you 50,000 rupees. It is not linked to per plate. Therefore, on this 50,000 rupees, GST is not payable. Plus, the notional value is not to be added in the transaction value for providing the facility of floor, electricity, space, table, chairs, etc. Okay, have you understood? Let's go to the next. See, B Private Limited enters into contract with S for purchase of a sugar at rupees 50 per kg. In addition, B Private Limited agreed to pay rupees 10,000 to S for to procure a particular quality of seed. So the good quality of sugar cane will get produced. Accordingly, good quality of sugar will be available. So the question is, on what amount GST is chargeable? That is 50 rupees per kg plus 10,000, or only on 50 rupees per kg. It is the GST is payable only on rupees 50 per kg. It is not payable on rupees 10,000. The 10,000 rupees is a business expenditure of B Limited, B Private Limited, but it is not linked to each kg of sugar that S will supply to B. B needs to ensure a good quality of sugar, and therefore he incurred this expense of 10,000, but it is not linked to each kg of sugar, and therefore this 10,000 rupees is not to be added in the transaction value. Friends, one just a passing note that on this 10,000 rupees also in income tax, TDS is not deductible. Check with your income tax professor. Okay. Okay. Let's go to the next. Case study 5. A Limited is having a factory in Maharashtra and also another factory in Gujarat. So the legal entity is one PAN, but there are different GST numbers. That is called as a distinct entity, correct? And as per Schedule 1 of the CGST Act, when there is a supply between distinct entity, that is considered as sale. It is not a sale as per financials, but it is a sale between distinct entity whenever there is a supply, and it has to be on the invoice. It cannot be on the delivery challan. Okay. Now, Maharashtra unit supplied certain material to Gujarat factory. Here you need to discuss how to determine the transaction value for the above. So I already told you that this is a supply. But on what amount the GST is payable? That Maharashtra unit need to raise the invoice on Gujarat unit. It cannot be under delivery challan. See, when it is a supply between distinct person, that is related person, section 15 fails to determine the transaction value and you need to go to the valuation rule. You will go to the valuation rule only when the value is not determinable under section 15, that is section 15 fail. Only when section 15 fail, you will refer valuation rule. There is a rule 28 which which gives the direction to determine the transaction value when there is a transaction between distinct entities, related parties. What it has been provided that you need to find out the open market value. Then like, kind or quality, cost plus method, residue method. However, there is one proviso which provides that if the recipient is entitled for full input tax credit, then whatever is the value mentioned in the invoice is the transaction value. Again, I am repeating. If the recipient, in this case Gujarat is a recipient, Gujarat factory is a recipient, is entitled for full input tax credit, then whatever is the invoice value, 1 rupees is the invoice value, is a transaction value. The question is, what is mean by full input tax credit available to the recipient? In other words, it is only of that transaction, or that is under section 17(5), it is not ineligible, or it refers to the rule 42 and 43 where a common credit needs to be reversed in case there is a supply of taxable and exempt goods. So it is not only that transaction, it is not restricted to section 17(5). However, it also covers rule number 42 and 43 of the CGST rules, that if the recipient is engaged in supply of taxable goods as well as exempt goods and he is reversing the common credit as per rule 42 and 43, then this proviso fails. You have to go to open market value to determine the transaction value. Okay, it is not per transaction, it is the recipient. If the recipient is not entitled for full input tax credit, the benefit of that proviso is not available. You need to go to open market value to determine the transaction value. Okay, now let's go to the next case study, that is very general transaction. A new phone price rupees 24 is supplied at rupees 20 because it is an exchange of old phone. On what value the phone is supplied to be chargeable to GST. See here, you need to understand that the consideration is monetary and non-monetary. Then section 15 fails. You need to go to the valuation rule number 27, which provides that when a phone is supplied and in exchange there is a non-monetary consideration, then you need to monetize that non-monetary consideration. That if the same phone is supplied at rupees 24,000 and there is no non-monetary consideration, it is only a monetary consideration of 24,000, then for this transaction also the GST is payable on 24,000 and not on 20,000. Have you understood? You need to refer rule number 27. Section 15 fails when there is a non-monetary consideration in addition to the monetary consideration. Okay. One more case study, that A supplied a material to B of rupees 10 lakh as per the contract, and B required to pay to A within 45 days from the invoice date. In case there is a delay, B needs to pay certain interest because of there is a delay. So it is basically what? Interest for delayed payment. Whether GST is payable on that interest. So you need to understand. So have you understood that there is a supply by A to B? It has been agreed in a contract that B will pay to A within 45 days from the invoice date. If there is a delay, then the interest is payable by B to A for that delay. Now, the question is whether on that interest the GST is payable, whether that interest is to be added in a transaction value to pay the GST. This is a question. See, there are three things. One, when there is a financial interest, that is, the loan is extended or a deposit has been kept, and in return you received the interest, which is called as a financial interest, that is exempt under GST. GST is not payable on that. However, this interest is for the delayed payment. On this, as per section 15 subclause 2, this interest will be added to the transaction value and the GST is payable on this amount. This is not financial interest. This is interest for delayed payment. This interest will not have a separate existence. The HSN GST rate of the original value of the original material supplied or original service provided, that will be applied to this interest on delayed payment also. Okay. So it is very well, GST is payable on this delayed interest. GST is not payable only on the financial interest. Now further there are three points, that this interest as per the time of supply of section 12 for goods and section 13 for services both has been provided, that GST is payable on delayed interest only when it is received. Normally GST is payable on accrual system of accounting, that you raise the invoice irrespective of receipt, you pay the GST amount, and the GST liability arises in the month in which you raise the invoice. However, this is an exception to that general rule of accrual basis of accounting to the cash basis of accounting, that only when you received the interest, actual receipt, the GST is payable. Now the invoice is already raised. How you will do this? By issue of a debit note. You issue debit note, and as per section 12 and 13 of the CGST Act, the interest is payable only on the receipt, and this interest is not having a separate existence. It will be, the GST rate will be as per the principal supply. As per section 15, what has been provided that this will be added in the value of the principal supply. Therefore, this is not having a separate existence. It will be, the GST rate is as per the principal supply of material or principal supply of service. Have you understood these tricky questions?